Hey, everybody. Welcome to Market Mavericks, joined by Scott Melker and Mike McGlone. We have a ton to talk about today. The Federal Reserve, Jerome Powell, more dovish than I think most of us had anticipated. The risk on trade is here. How do we break it down, guys? What the heck?
I got to hear from Mike first, because the fact is we have anticipated that there's nothing that would make Jerome Powell pivot, although they haven't pivoted. It felt like a verbal pivot. Nothing would make Jerome Powell pivot short of something breaking, especially the stock market going down. And we just got pretty clear language that the Fed is going to pivot. And he was extremely dovish, and nothing's broken. We're sitting at all-time highs. So I want to hear Mike's thoughts on that for sure.
Definitely a shocker to me. I'm happy to go where you want to. Yeah, let's start with my first chart. This is expectations for the Fed. I was really surprised he went that dovish. It was clearly dovish, but this is a Fed funds market. The futures, what it expects. I keep the thing I like to look as a year from now. By December 18th and 24, expect about 150 basis points of cuts. I think that's way too much. But hey, that's what the market's pricing in. And I want to go first to what we've been talking about most is TLT. What I see is a potential bottom in TLT versus, now here I have it versus SPY. And this environment to me is ideal for a bond market rally for next year. Now, how much the stock market does is somewhat subjective, but if the stock market starts trickling down for a recession, which might be why he pivoted, and I'll show you why in a second, this is what happens. And I want to show you the history of this. So real quick, we'll just show you. This is TLT in white divided by SPY. Now, it does include dividends, and SPY right now is less than 2%. TLT is over 4%. So that doesn't, this is just pure price. But here's the last time. I guess this is the big pivot back in 2007. That's right about when TLT bottom versus SPY. Big breakout there. We had a little pivot back here. Of course, this was with COVID. And here we are buried. I just look at that as there's a great opportunity. If he's pivoting, because I think he's pivoting, which is because things are really tilting towards recession. He's worried. And here's one good example why to pivot. We did have retail sales come out a little bit stronger than expected, but I've been taking, this is a chart I've been showing retail sales versus CPI. We just take out inflation. And it was the deepest negative since, realistically, ignoring COVID, since right before the great financial crisis. What I show now, so it's popped up positive a little bit, which is good, but I show the crocodile jaws of the highest rates and lowest leading indicators since these levels are well above, rates are well above where they were before the great financial crisis, and leading indicators is well below where it was right before the great financial crisis. So from there I can pivot, but that might be some of the reasons he is signaling pivot. He sees those severe deflationary forces kicking in. I'll end with this. Fed funds right now is at 5.5%. PPI, the latest material goods number, the one that goes back that we have back to 1960, is minus 0.9%, and the Bloomberg Commodity Spot Index on a one-year basis is down almost 15%. So from commodities, from my standpoint, that's a clear global recessionary trajectory.
So a couple things from my side here. And so number one, I think you mentioned about, is he seeing something that we're not seeing or that the markets are not seeing? Because certainly the markets rejoiced yesterday, and they're not, at least the retail investors, the stock market ripped higher, risk assets ripped higher, gold, silver ripped higher. I mean, everything ripped higher, frankly, yesterday. And so the bigger question I think that you brought up is he seeing something which is causing him to pivot sooner than we all thought, right? I mean, I think it surprised each and every one of us. The other question I have, and I throw this out to Scott or Mike, is one of the thoughts I had was you have 34 trillion in U.S. debt, right? And basically $7.6 trillion within the next 12 months is rolling over. Is it possible that we've heard Janet Yellen talking a lot that they realize they have to get these rates down sooner than later to refinance this debt? Or is that irrelevant? Because I think, you look at the difference of 5% versus 3.5% on $7.6 trillion. It's massive. That's a massive difference in interest payments. So that would be just one thing I would say. The other thing I would say is, does him pivoting earlier, is that a factor of the coming elections in November, where if he pivots too close to the elections, it could influence the elections? And Scott, I see you shaking your head.
Yeah, I mean, didn't Biden just kind of come out and make at least a out of the side of his mouth statement that the Fed effectively needed to do this, and all of a sudden, this non-political agency called the Fed starts to talk about it? Clear, he didn't pivot, right? I view it as a pivot what they just did because his language was a pivot, but it's
Yeah.
not like rates at this meeting, and they could have done that if they were really going to pivot, right? But and what Mike was saying kind of before the program when we were talking about it, we got 3 more months until that first cut is supposed to come, and a hell of a lot can happen in 3 months. And I want to also add to that, when's the last time that the Fed's dot plot was actually accurate? When was the last time that anybody predicted correctly? I mean, we're going on ideas of what might happen in the future that never come to fruition. I'm not saying that he was not extremely dovish and likely to pivot, but show me the money, right? I mean, do the actual pivot, and then I'll start talking about a pivot. But I think it's very political for the exact same reasons that you just said. And I also think they're high on their own supply. I mean, to be quite frank, I think Janet Yellen believes that debt's not a problem, right? I think these people are literally delusional and think that they're having their little Volcker moment and they're going to thread this needle and easy soft landing. I think right now what I witnessed yesterday watching Jerome Powell was George Bush on an aircraft carrier with a big sign that said mission accomplished.
I thought of that too.
Or for another decade. I mean, that's how I viewed it, right? I mean, you brought up my chart. That's TLT. I'm really happy. I've been holding it since 83 $4, and because of the reasons Mike showed, I have no intention of switching that. And that's because of this, right? Look at the 10-year yield. We were on here at 5%. Mike was saying probably it. Probably it. We're at 3.9%. It's absurd how fast this has fallen off a cliff. And this is doing the Fed's job for them, right? If bonds continue to rip and yields fall this hard, Fed doesn't really need to do anything. So my surprise is why did Powell not just say, we're going to pause for a while and see what happens? I'm very surprised that they really hinted at this pivot.
But so my question would be then is, if rates are coming down this quickly, that means the borrowing costs for money are coming down very quickly, and really that can flood the market or start to increase money supply again, right? I mean, more people taking out loans, mortgages because the rates are falling. So doesn't that then put pressure on the inflation side? And CPI is still 3.4, whatever it is. And so all of a sudden you start to create all this new money going back into the system. Are we just headed back to 5% or so?
There's the problem. It's a wealth effect. That's why I show you in the chart. That's why I was shocked. The S&P 500 is up well over 22% on a 12-month basis.
Mm-hmm.
And the Fed is very rarely cuts rates at environment, and they very almost always so they very rarely, cut rates, but they must always cut rates when it's down 20% on a 12-month basis. And this is what I show you. The last time we were here and rates were this high was right before the great financial crisis. So that's why I was like, okay, well, maybe that's why they're pivoting. But I look at it as there's a few things that I like to point out from like a commodity standpoint that are just clearly global recessionary. And that is what I show you here is gold going higher and crude oil going down. And you know what happens when the Fed starts hiking, or when they hike rates? It's usually when they start easing rates. It's usually when they have to. It's already too late. And I think that's the situation we're in now. But one thing I wanted to really point out is there is severe deflationary forces from commodities. Now, this is part of the reason I've been so bullish the bond market way too early. Part of the reason I thought 5% was the peak was SP was crude oil was peaking at 95 and it belonged where it is now. Now it's at where it is now, right around 70. But here's what I show you is a key thing most people won't see is in white, I show you natural gas. So I just take the natural gas contract. I multiply by 10 to put on the same scale as crude oil. So when natural gas right now is around $2, around $2 per MMBTU. At these levels, typically crude oil's been around $40. And you can see what I show you in white is crude oil heading straight down towards that level. Now, I like to ask, what's going to keep that level to go up? This is why I'm still very bullish on bonds. I think yields are going to drop a lot. Very bullish gold. I can't see what really stops gold from heading towards $3,000 an ounce. That's what I show you in this chart. And particularly when you start getting pivots. And typically what happens, what's unique, I'll show you in this chart. This is just to your notes. When you see pivots, usually the markets, the yields start going down lower, Fed start easing, and here's what I show you in white. Stock market rolls over a little bit later and then plunges for a recession. Yields start going down lower, and the stock market rolls over later. But you usually have that little bit of a hopium period in the stock market. And yeah, it certainly can make and stay above new highs. But as the Fed starts easing, the question will be why. And then there'll be typically they would hike rates on an escalator and then cut them on an elevator. Now we hiked rates on the elevator, we might cut them on the escalator. I think that's what's going to happen. The first time they hit that easing button, there should be a significant pause for markets to tell them they need to ease more.
Interesting. So expecting, like, let's game out into January. Like, are you looking at rates continuing down in the short term here, or do you think is there going to be a technical level where we start to see a stabilization?
Well, here's what the market's looking from the Fed. And, Scott showed the 10-year note yield. There's definitely going to be some bounces in yields, but right now they're pretty well inverted. I mean, you look at that 2-year note at 4.39% and Fed funds at 5.5%. That means Fed's got to start cutting rates pretty fast, or the 2-year note yield's wrong at 4.39%. So basically, it's kind of got to happen, or something needs to change. So the way I look at it, for them to cut rates at this fast, I've been saying this for a while. I've been wrong. The stock market needs to go down fast enough to make them need to cut rates. And right now, there's just no need to cut rates. But he's anticipating looking ahead, and part of it might be political. I doubt that. What you said about with the interest on the debt, that's something that would have to be very much behind the scenes. And just go through the Fed minutes. These things aren't discussed, just like the dollars hardly ever discussed. They do stick to their mandates, and then you always have to look back from when you're in a position of power and you're making decisions, and Powell's very good at this, looking back from the future and seeing how history is going to judge him. Remember, this is a guy who pushed back on Trump. That's why I'm still a bit surprised he pivoted so much, but in the next few months we might see why.
I think that you guys are giving him credit for being really smart. I think I'm giving him credit for having a huge ego. He thinks he's done, mission accomplished. I'm the best, soft landing. Everybody's talking about it. Let's go. No, that's really what I believe at this point. I cannot give him credit for being so forward looking all of a sudden when they always are looking in the rearview mirror that he sees something coming. You may absolutely be right. I just can't buy it. And right now, honestly, when you look at the market, bears just have to prove it to you. I will give you a corollary, though, because I remember this exact same feeling when Bitcoin went from 65,000 to sub 30,000 and back to 69. We made a new all-time high above 65. Me and everybody else said, we're at 69, new all-time high, blue skies, we're going straight to 100. Right. We went straight to 15. Yeah. Right. So I'm skeptical of the unbelievable bullishness everywhere. I'm not saying I'm bearish. I think the bears have the job right now to do the proving, not the bulls. But man, it is euphoric. You have BlackRock out here saying it's a green light. Everybody get all your sideline cash into the market at the highs. I don't know, man. It feels a little dirty here.
So, Gareth, can I piggyback on that a little bit? I think it's exact opposite of where we were a year ago at this time. The consensus was recession. Some of us got that wrong, and maybe it's delayed. And the market had been beat up already. So here it's the opposite. We've had the most beat up bond market ever for 3 years. It's just starting to recover. We have this record rally in the stock market, potentially making new highs. But then the reality of all the interest rate hikes and recession in the rest of the world starts kicking in a few months, and post-holiday, depression, and then kicking into the elections. I just look at it simplistically as the pendulum swung way too far low last year. We know Bitcoin was just too cheap at 15 grand. That was pointed out. And now the pendulum is so way too far the other way. NASDAQ new highs this year, and it's going to be, Fed's going to ease, and there's going to be no recession, and it's a soft landing. So simple just a little bit of mean reversion in that risk asset rally is that a year from now is that deflationary bent that I see in commodities trickling down to everything.
I just figured I'd throw this up to you guys, but on the right side, this is Bitcoin's first top pullback and second top, right? This is, and on right here on this side is the S&P's chart. And, again, we don't know for sure, but I think Mike or Scott, this is what you were alluding to, is like, are you headed towards a little bit of a higher double top, and then the bottom falls out like this on Bitcoin. So
it's exactly the chart that I'm talking about. Listen, I'm not saying it's going to happen. I want to repeat once more again. I am not overly bearish right now. I think there are a lot of reasons down the road that these things could happen. I think that Mike's premise is correct, but right now I can't see shorting this market.
yeah.
Personally, right?
Well,
So
I agree with you that yesterday, at least to me, it did seem like he was kind of
that it
pounding the
changed.
chest. Yeah, that he was pounding the chest. He was taking a victory lap. He was saying, "Oh, we rock," like, and again, he's not the first Fed chairman to do that. AKA in 2008 when Bernanke did that and said there was not going to be a recession, and we know what happened obviously after that. So I think these guys are humans just like everyone, and they tend to want to be congratulated and they want to claim victory. And then the question is what is the data ultimately? How does it play out?
So there's one chart I also want to show on that same subject that I'm still concerned, and I mentioned to Scott before, and that is the underwhelming performance of Bitcoin versus the Nasdaq. Now it's still below the peak from 2017, and Scott's good at pointing out that's a bit of an aberration. But I view Bitcoin versus the Nasdaq as a great indicator for risk on or risk off. So clearly a risk on bounces here. But what you mentioned when Bitcoin first bounced to 65, then corrected, then made a new high, it didn't make a new high versus the Nasdaq. And here we are just bouncing in this downward trajectory since the peak. Now, maybe it's going to go back up, but it's still, that's why I look at it, still, to me, a risk-on asset. I don't see why it should be more like bonds and gold if the stock market goes down. But on this chart, I just overlay with industrial metals because industrial metals are like a very good adult indicator. There's not a lot of massive speculation, people putting in their 401ks and stuff. And they're still showing a global recessionary tilt. So part of that's China. Now, if we're not creating more wealth in China, it's not good for Bitcoin. A lot of that's Europe heading towards. But this is one thing I want to point out. And when you compare Bitcoin to the Nasdaq, yeah, it bounces here. That makes sense. So what do we got going for next year?
Scott, turning to kind of Bitcoin and the price action, what can we make of all this chop, right? I mean, we had an almost 10% correction. Now we've snapped back where we're still below the highs. I mean, this is just price trying to figure itself out and trying to decide if the Bitcoin ETF gets approved anytime, or what's the deal here?
Yeah, I mean, pull up my screen. I wouldn't even call it chop, right? But it's just about time frame. I agree it's chop today, right? But if you're looking at a weekly chart, we had 8 straight weeks of green and then kind of a dip here in the last day or two and quickly bought right back up. If you look at short time frames, this is the hourly. I don't usually zoom in this far, right? But I mean, you can see today we fell from 43 down to 41.4, immediate bear trap, right? That just liquidated all the longs and bounced right up. This is just somebody having a whole lot of fun liquidating people who are over leveraged and having FOMO and making a ton of money, right? This liquidated like 100 million or something in longs, just going down there and bounced immediately back up, right back to the price where it started. So right now, I think that Bitcoin has probably reached its high here, maybe for the week. I don't know for how long. Altcoins will probably go crazy while Bitcoin consolidates here. And now we wait for the ETF news, which now, guys, we're 3 weeks away, 3-4 weeks away from what that's the other consensus that worries me. I do think it'll get approved, but man, if it doesn't.
Yeah, could you imagine, right? What in terms of the altcoin market, like this is something I've been kind of trying to come to terms with is what's the difference between the mindset of the investor in the altcoin market where I'm seeing 3x, 5x, 10x type moves versus the past bull markets? Is there any difference? I mean, is this just repeating the insanity?
I hate to say, I think this is just an appetizer for the insanity, for better or for worse, because most people will lose their money when this happens. But we're not even to the point of the 4-year cycle post-halving that this should be happening. So now let's think about the perfect storm for crypto, right? And people can disagree, but we now have this macro sort of idea of a pivot. We have an ETF approval. All these things have to happen, by the way. Then 2 months later, you have the halving. And then for the next 6 or 9 months, we're in the rhetoric of a presidential election where markets tend to do well. I mean, it's you couldn't, once again, it makes me almost too euphoric and want to go the other way, but you couldn't line it up better for news for crypto. And I think we're just going to see absolute insanity. I can tell you that as someone who gets sent deal flow, I'm not even a venture capitalist. I see most things. I do a few angel investments. It was completely euphoria in 2020, 21, hundreds of them coming into my inbox, literally nothing for years. Now, the last month, it's like an absolute repeat of the same euphoria and same excess of the last cycle. Already, we're going to see another 1,000 altcoins launched with all the catchphrases that you've ever heard of, and they're all going to do 100x and then collapse probably down 99.9% when the next cycle hits.
Does it concern you?
I think we're gonna have a full on alt season again, because humans human, and in this case, people can effectively literally print money, send it 100x, and then call it a day.
Wow. So it doesn't concern you at all that like the euphoria on like, and again, granted, it's a little bit of a sound box right on X, but like, that the comments those are the comments that we're seeing, at least that I'm seeing, are more indicative of being closer to a top than a bottom. But you don't think
temporarily? No, I think temporarily. I think there's we're going to get one of those inevitable 30-40% correction. You get a 30% correction on Bitcoin at some point. Alts go down 50 or 60%. But then I think they zoomed all-time highs. I mean, this is Solana. This is on a logarithmic chart, so obviously, it looks a little different. But you're 259. You're still only at $73. The all-time high was 260. It's crazy how far, and that's the best chart, right? It's crazy how far we still have to go for us to even be talking about recapturing the last cycle for altcoins.
Gotcha. All right, what's the next on the agenda? I'm going to kick it to you guys. What do you want to talk about? We got about 10 minutes left, I think, or so.
I mean, Mike, I'm actually curious if you think that we'll see the repeated altcoin cycle insanity of past cycles.
I don't really agree with that one, Scott, because I think that insanity cycle towards the end of the longest period in history of zero interest rates will be looked back upon like the peak in the stock market in 1929 for alts. I mean, there's maybe 10 cryptos that matter, and then there's 20,000 wannabes. But what I'm showing you here is what I think is how you look at is a seriously negative chart for what to expect for deflation next year in commodities. And commodities are a leading indicator for all that, which might allow the Fed to ease, but they will be lagging everything. To me, this is what's going to be happening is just looking at Bloomberg Commodity Index, it's likely to pop back down towards that support line. That's just normal. But it has a good reason to do it with typically when the Fed market starts cutting, that's when the market, it usually takes about 2 years to bottom. But in terms of cryptos and Bitcoin, I'm still stuck on this chart here. I want to see a little bit of continued divergent strength from Bitcoin versus the NASDAQ, other than just a risk-on asset that has the highest beta. And it makes sense after a year like last year that everything was beat up, that everything would bounce this year. Now next year is the key thing. And as I show you, I think the key chart for next year will be this TLT just reverting a little bit versus SPY. Guess what it does? That's what it does in recessions when the Fed starts easing. The key question is, why should they be in a hurry and ease anyway, where like the velocity they have in the past, and help create more liquidity than needed and help pump up the wealth effect, which would support the alts. That's why I think Bitcoin is going to show that it might be a digital version of gold, but I'm more worried it's still likely. It's just a highly risky asset, and it's just up the most this year because it has about the highest beta.
So I have a quick question for you guys. Is one of the charts I want to show is this chart here. This is Microsoft's daily chart, and I was talking about this recently. This is a bear flag, and even yesterday when the markets were ripping, Microsoft was flat on the day, and you could see the breakdown today. And ultimately, I guess the question is, it seems like we're starting to lose the leadership of the Magnificent Seven, if you will. Like if you look at Google today, Google's negative, right? If we look at Amazon today, Amazon's negative. Can the market hold? Is there anything to this, or is this just kind of a switch to other assets like in the Russell, or is it telling us something, Mike and Scott?
Go ahead, Mike.
I like to just point out that it's a bellwether, and if you look at just when the stock market bottomed in March of 2009 and the Fed started easing in September 2007, so a year and a half, maybe almost 2 years. The market bottomed towards the end of 2002, and the Fed started easing at the first trading day of 2001. So this whole concept of easing is really bad, particularly when you have a market that's up a lot, where there's a lot of profits and a lot of wealth. And because usually it's towards the end of the cycle, you need to have a market get beat up and then it recovers. And this is where I'm really concerned is markets just are forgetting the facts of when you stall, when you stop tightening, sure, that's great for stocks. We've done that. Boom, we've all made potentially new highs. But then when you start easing, that's because the effects kick in and you have to catch up. And to me, that's what you're seeing in Microsoft.
Gotcha. All right. So going into next week, obviously we're coming into the holidays. Where do you guys look for opportunities? Do you guys stay out and just kind of go relax over the holidays? What are your thoughts?
I'm detaching for at least a week next week when my kids are home from school in advance of Christmas. Then I'm going to come back a week later and see what happens. So I'm doing no shows next week, which means if I don't have a show, I don't have a reason to look. And if I don't have a reason to look, I would go touch some grass, But I find this to always be kind of a strange time to attempt to trade. Because, low liquidity, people are on vacation. It's just very difficult. By the way, this was Apple you just brought up of mine. You were talking about that. I don't know if people noticed, but today Apple actually swept its all-time high and is currently trading below. So that's a really interesting chart to see what happens if you're looking for those. And back to that same sort of idea that Mike was talking about there, bulls will tell you, oh my gosh, we don't have to depend on the Magnificent Seven anymore. Everything's going up. They did their job. They can go rest and retire and get fed grapes and be fanned by beautiful women now. And bears will tell you it's a leading indicator that everything's about to drop. There's always two sides to every one of these coins and perspectives. Apple bears definitely want to see this daily or especially a weekly close above that high though, and not end up with that little wick above. But yeah, I'm going to be chilling the next couple of weeks, trying not to pay too much attention. I'm really just now at this point, I'm focused on that ETF, right? For me, I'm trading crypto. I see so much more opportunity there. I took my hedge, massive long position in TLT. I didn't short anything. I didn't do anything crazy. I'm riding it. So as far as my equity positions are concerned, that's what I'm doing there. And I don't see any reason to cut that yet.
So this is typically the week between Christmas and New Year's. I have to speak from experience. I'm always taking that week off. It's usually a great week to just get out of the markets and maybe scalp. I mean, for the traders, if you see something that's out of line, you can sell high and buy low and just, try to help add liquidity. But I think what we're going to see is what Scott said is, to me, TLT this year looks just basically what GBTC looked like last year. So if you are smart enough and lucky enough to buy GBTC at the end of last year, you're up 300%, 320% this year. Are you overweighting that position? Or are you lightening up? Your logical sense is, okay, thank you very much. I'm way overweight in my allocations now, my value at risk and everything makes that position too big in my portfolio. You just have to lighten up. And then I look at TLT and bond market. It's like, well, if there's any year that it might be one of the best performers, I just look at it by this time next year. If we're not talking about deflation in every other sentence, I would be delighted. That would be wonderful. But history shows, and the markets I show you, certainly what's happening in commodities and happening globally, is that's what we should expect next year, which is typically good for bonds. Treasury bonds usually good for gold and bad for most everything else.
Interesting.
Usually.
Yeah, and last thing I'll say too is just to take a look at, we were talking about the leadership changing from the Magnificent Seven to some others, and just to show you here, I mean, this is just one stock to show you. And I happen to be in this when they reported earnings right here, and I got crushed on it. It fell all the way down from basically about $30 down to about $20. And then look at the rise. And this is on no news, literally no news, and just the market environment. It went from $20 and in 3 weeks basically has topped out. And who knows if this is the top, but back to $47. And so it just shows you, for me, I look at this and I say, there's no news. Their earnings actually caused them to collapse. So fundamentally, is this more of a dash for trash? Just like, Bitcoin runs first. You could equate Bitcoin to the Magnificent Seven. And now money's like, okay, these things have run up. Now let's take some money and put it in all the other crap and let it run. And I think, at least for me, and Scott, looks like you're shaking your head, that could be what's going on.
The dash for trash is the most fun time in markets if you have the presence of mind to get out of it and say, I just won the lottery and sell immediately.
Yep. Absolutely.
I wouldn't be trying to ride upstart to new all-time highs right now. That's all.
No, I wouldn't either be. I wouldn't either. Yeah. All right, guys. I think it's just about time. So any final words from you guys?
No, enjoy the holidays. I'm not going to see you guys next week. You guys should do this though, because then I can watch.
No, I'll be on a cruise. I'll be on a cruise next week too, actually. So nice. we'll have to reconvene after that. But Mike, anything from you?
Oh, that's it. I'll end with this. TLT to me looks like GBTC did a year ago.
Nice.
My man.
Sounds good, guys. All right, you guys all have a wonderful day. Thanks for everyone tuning in, and follow these gentlemen. They're awesome.